Hey, what's up, guys? Brad here. So, today I want to talk about 10 stocks that Robinhood investors are buying now over the last week. So, here's a site I really like, robintrack.net. Now, you can see over the last week how many accounts held these stocks in their portfolio and then how many accounts hold them today. So, this list is the biggest change in the last week. Okay, I'm going to go through the top 10 in this video. So here's the top 10. I just want to describe some of these columns before we dive in. The second column here is market cap. That is the number of shares outstanding of the stock times today's price on May 22nd. This kind of gives a rough estimation of the size of the business. Okay. We've got the high and low prices in 2020. So this is looking back from January 1st, 2020 to today, high to low. We have today's price on May 22nd. Now, this is the number one hack, I think, for investors. This website here, Dataroma, shows what these great investors have in their portfolios, which stocks they have in their portfolios, and it shows what they've bought and sold in the most recent quarter, which is quarter one of 2020, January 1st to March 31st of 2020. Now, if all you do as an investor is buy stocks that the great investors have bought recently, you're going to do so much better than if you're trying to pick stocks on your own. It's like bowling with bumpers for investing, okay? These are investors who have been able to compound money at a rate of return greater than the market for decades, okay? It's such a hack in the investment world to look at what great investors are buying. So, one of my columns here is how many of these super investors who have compounded wealth for decades, higher than the market averages, how many of these super investors own these particular stocks? And that is a top criteria on my list when I'm deciding whether or not to purchase a new company, a new stock. And then I want to get into these two, earnings yield and return on invested capital. Now, these are the two factors that go into the magic formula. That's Joel Greenblatt. If you guys haven't heard of Joel Greenblatt, he's got a couple books out. One of the most recent ones is The Little Book That Beats the Market. And it's really about how to use these two criteria in order to come up with a list of stocks that have a high likelihood of outperforming the market averages over time. And these are two, metrics that Greenblatt discovered. He spent hundreds of thousands, probably millions of dollars back testing data to try to figure out, which metrics would provide the best returns as compared to the market averages. Blindly, you're not digging into the companies at all. You're simply using these quantitative screens to generate a list of companies. So earnings yield is his measure for how cheap a company is, and return on invested capital is his measure for how good a company is. All right. And there's a website that I'll show you guys here, magicdiligence.com, which kind of breaks out earnings yield and return on invested capital. Now, if you go to the Magic Formula website, you'll get a list of companies that are highest in terms of their combined score for earnings yield and return on invested capital. But it doesn't actually tell you what the numbers are for the earnings yield and what the number is for the return on invested capital. So this website does do that. So that's these two columns, the magic formula criteria. And then this last one is the Value Investors Club. Now, this is a website that was also created by Joel Greenblatt, where investors submit investment ideas, and it's very competitive. Only the best ideas get accepted, and it's a great way to kind of learn more about an investment. If there's a company you're interested in investing in, you come here to Value Investors Club, you enter the ticker, and you see if there are any write-ups recently on the company. And if there are, these are really good investors who are submitting these ideas, so that just supports the idea that it might be a good investment. So that's another great free resource to look at when you're considering whether or not to invest in a company. So let's get into it here. The top 10 stocks Robinhood investors are buying. So these first two are pharmaceutical stocks, and they're really a play on kind of the Rona vaccine, the current pandemic we're in. These companies are working on a vaccine. They have no earnings. Okay, so there's no earnings yield. So, I look at these two companies and I think, well, yeah, they could be home runs, right? But to me, it's like going to a casino and playing roulette. It's probably even worse odds than that. So, I don't really see these two as investments. They're really speculative bets. And it makes me a little nervous that, there's so much activity on Robinhood in these two very speculative plays. I hope people are only putting money into these that they're comfortable losing. It's hard for me to characterize those as investments. You see no super investor owns these. There's no write-ups in Value Investors Club. And there's really no earnings history on which to value these companies. So a little nervous about these first two. Aurora Cannabis. So this is obviously a marijuana play. Now, again, no earnings. This is really all about betting that this company will kind of dominate the marijuana space in the future. But guys, it's like betting on an internet company in the late 90s. Obviously, there were a few home runs within that space, right? But there were a lot of companies, a lot more companies that went out of business. So it's pretty early in the cannabis space for me to even be considering investing there. It's a very speculative play here, Aurora Cannabis. Again, that's a tough one for me to get comfortable with. Number 4 on the list, we have Delta Airlines. Now, Delta Airlines has a pretty good earnings yield, but keep in mind, there's a lag in earnings disclosure. Every quarter, a company releases their earnings report. And, so the first quarter is out, but you got to remember, it was only the tail end of the first quarter when earnings really started to get hit for these airlines companies. So, you see a high earnings yield there because the price has dropped significantly and the earnings haven't, because there's a lag on reporting. Obviously, everyone's heard Warren Buffett has been selling out of his airline stocks. I would not want to be on the other end from Warren Buffett when it comes to, buying companies that he's selling. There is a write-up in Value Investors Club. It's, obviously over 2 years ago, so a lot has changed since then. But if you're considering investing in Delta, I'd highly recommend looking at this Value Investors Club write-up. Airlines make me really nervous right now. I think, it's going to take a long time for planes to get back to full capacity. Like this situation we have where people don't want to be confined in planes breathing the same air as other people. I think it's going to be happening for a while. And considering the amount of debt that airlines have, they're going to be getting a lot of help from the government, but that's not necessarily going to benefit equity holders. And Monish Pabrai was talking about this in a recent interview, how he believes equities are going to be impaired for equity holders of airlines for quite some time. So be very cautious with airlines. Make sure you understand the downside risk with all of the debt, all the cash burn, all that stuff. GE, we get 7 super investors who own GE. I don't know that much about GE. I don't like the return on invested capital. It's pretty low. I like to see something over 20% in the return on invested capital category. Earnings yield is decent, but I'm not impressed by return on invested capital. I would look, if you're interested in GE, I would look to see when these 7 super investors got into GE. You kind of estimate at what price they got in based on that. And yeah, GE just strikes me as a company that's kind of on the decline. Okay, not super interested in GE. Save is Spirit Airlines, very small company, 700 million market cap. 4 super investors own this company. Earnings yield, it's not super compelling. Again, it's an airline, so I think what's happening now with earnings, what's going to come out based on second quarter earnings is going to drop this number quite a bit, would be my assumption. Return on invested capital, pretty weak there. There is a write-up from April 2018 in Value Investors Club. Check that out if you're considering. Now this one surprised me. This is a 2 times leveraged ETF for oil futures contracts. Okay, so it's really a bet that oil prices are going to go up in the future, and it's a leveraged bet 2 times. So, I just found an article on this one. It came out today. I think it says 7:39 p.m. because it came out in the UK. But wildly popular oil ETF has been cut off by its broker from buying futures, limiting its ability to meet its investment objective. So that's a little concerning. Well, this is for USO. We're looking at UCO, but it's still an exchange traded fund. I wonder if anyway, you guys really need to understand these leveraged ETFs. If you're gonna, I think you should really understand them if you're gonna buy into them, because in a situation like this where the ETF can't buy oil futures contracts, I mean that's the whole point of the ETF, is for it to track oil futures contract prices. So make sure you understand these things if you're putting money into them. It got down to 12. It's at 22 now. It's an interesting idea to have a leveraged ETF based on oil futures contracts, but I mean, this is a big, I don't know what I'm doing with this one. If anybody knows more about UCO, please chime in the comments. I'm curious to hear your thoughts on that one. Next, we have Amazon at number 8. It's a 1.2 trillion market. It's one of the biggest companies in the world. Microsoft, Amazon, Apple, they keep kind of switching positions for the largest U.S. company. But guys, there's a lot of people, a lot of super investors who own this company. My big problem is the earnings yield and the price. I mean, the price now is basically at an all-time high, okay? And when you're buying something at an all-time high, when you're paying 100 times what the earnings are for a share, guys, it's hard to imagine a whole lot of upside in that situation. Obviously, there's a lot of downside, but it's hard to see a whole lot of upside when you have a $1.2 trillion company. You've got one of the largest companies in the U.S. I mean, if you're buying at all-time highs, I'm not sure what your upside, picture is, what your projections are for what you're going to return on that company. Obviously, Amazon is a fantastic company, but I can't justify paying almost $2,500 for a share. And I valued this recently. I valued Amazon shares at around $1,300. So, I mean, if I was a shorting guy, I'd seriously consider shorting Amazon. I am not a shorting guy, because when you short a company, the best you can do is a double, and the worst you can do is go bankrupt. So I'm really not interested in that risk-reward ratio. But I'd certainly be waiting for Amazon to come down quite a bit before buying in. AZN is a pharmaceutical company in the UK that's working on a Rona vaccine as well. Now, there is one super investor who owns this company. You can see the price today is basically at the 2020 high. You know, there's a lot of enthusiasm for this company that's pushed up the price. Again, I think it's, you know, probably like playing roulette. So I'd be nervous about this one. And then Hexo is a cannabis company in Canada. $200 million market cap, very small company. It's the smallest company on this list. And no super investors. There's actually a short thesis on Value Investors Club. So if you go over to Value Investors Club, you type Hexo, you can see in October 2019, someone submitted a write-up that proposed shorting the stock. You know, the price was $3.60 then. It's obviously dropped a lot since then. The price today is 62 cents. So hopefully this person got out of the short and got like a 10 times drop, which means what they made like 90% on their money in just, you know, 5 months or so, which is pretty impressive. But, you know, the short thesis was based on a $3.60 share price. So at a price of 62, you know, certainly it's possible that they see it as I mean, this is all speculative. There's no write-ups in Value Investors Club right now who have Hexo as a long. Only this short at a quite a bit higher price. But, you know, like Aurora Cannabis, it's a very speculative play. There's no earnings, so it's burning money. It's a startup. It's basically a startup in the cannabis industry, which, you know, like I said, back to the early internet company analogy, we just don't know who's going to come out of that. So, you know, one play on that you might consider is just buying an ETF with a basket of a bunch of cannabis companies. So, you know, as long as a couple of them rise to the top in the industry, you know, you got a good chance of doing fairly well if you own a basket of them. But certainly these individual cannabis companies just seem super risky. So that's it, guys. I just wanted to give you my thoughts on top 10 stocks that Robinhood investors are buying. Let me know what you think of any of these. And, you know, if any of them have piqued your interest, I'm curious to hear from you in the comments. Smash that thumbs up button if you like videos like this. And please hit that subscribe button so you don't miss any future videos on, you know, stock analysis, you know, growing, compounding your wealth over time. Great topics. All right, guys, I will see you in the next video. Take care.